Today's panel, we're going to talk about a bunch of different real estate strategies. We're going to talk about flipping. We're going to talk about wholesaling. We've got some big developers on the panel. We're going to talk about buy and hold. So we have a tremendous amount of both depth and breadth amongst our panelists. Folks that have been doing this for decades. Folks that have done many hundreds of deals, ground-up development to buy and hold to wholesaling type deals. So with that said, and with the level of breadth and depth that we have on this panel, I'd love to go down the row and get an idea from each of you how you got started in this business, what your evolution looked like, because a lot of us in the audience are constantly evolving our business. Some of us are just starting out, some of us have been doing this for a long time, but we're all evolving all the time. So I'd love to hear a little bit about your journey on how you got started, how you evolved, and ultimately where you are today.
Good morning, everyone. My name is Liz Faircloth. My husband and I started investing when we were engaged in 2005, and we bought a duplex in Roxborough, and we got a loan from my father. That's kind of how we started, which was really scary that he loaned my husband and I money that we weren't married yet. You know, I said he must have really had a lot of faith, more in me than my husband, but at the time. So anyway, we had started there, and then we decided to move to New Jersey. We did a 1031 exchange. We sold that property, did well with that, and then we ended up buying in Ewing, New Jersey. We bought a portfolio there and kind of grew our buy and hold really primarily. And then we started doing some fix and flips on the side. So we've always had a handful of fix and flips going on at the time. We have various partners in those. We do some work in Philadelphia. We do mostly in New Jersey from a fix and flip perspective. And our buy and holds are mostly multifamily, New Jersey, Pennsylvania, and now North Carolina. So that's the work we're involved in. And we're based in Trenton, New Jersey.
Awesome. So does everybody here know what a 1031 exchange is? Anybody not know what a 1031 exchange is? Okay, I won't make you. I just wanted to make sure everybody knew when you were talking about 1031.
It's a way to defer the tax of when you sell a property, you're going to have a gain, and we all like to save money on taxes, and it's a way to save on that tax of selling the property to roll it into a property, in a certain time frame. So.
And what's your long-term strategy for the buy and holds?
Yeah, our long-term strategy, we've been actually selling a lot of our smaller multifamilies, and we're getting into larger multifamilies. The last few years, we bought a 50 unit with a group of investors, and we just closed on a 200 unit, and we're just kind of trying to grow from there.
Awesome. So the most common question I get asked these days, and basically throughout the cycle I find that questions change, but the most common question I get asked today is, with the market potentially changing, I think we all feel like we are getting towards the top of the market, and whether that market changes a week from now, a month from now, 3 years from now, at some point in the near future, I think we all feel that the market's going to change, get a little bit softer, trend down a little bit. I assume that, like me, each of you are probably thinking about the next part of the market cycle, and are probably, or potentially, maybe not, adjusting your strategies based on the changes in the market. Can you talk a little bit about what you're doing to adjust your strategy, or to think ahead to the next part of the market cycle, to basically either keep your business growing or to keep your business on the same trajectory it currently is?
This one's the one that doesn't work? It's working for me. It likes me. All right. For us, we have a handful of fix and flips happening right now in New Jersey and Pennsylvania. Some new construction and some, renovations. So something we've started doing, just to be mindful of, that the market is kind of at the top. We've actually started doing some flips in Trenton, where we're buying dilapidated multifamilies, renovating them and then selling them as more of like a turnkey. We're not like a turnkey business. It's just like a little piece of our business. But we've found that that's a way to basically generate chunks of cash, we like to say. It's more that active investing. So we have our multifamilies, growing, and that's like the, the passive income, so to speak, or the smaller checks, I like to say. But the chunks of cash you need for your business for lots of different things, right? We all need chunks of cash. So that's been one thing that we've started that's really been an interesting, new venture for us, because a lot of people come to us and say, I don't have the time or the interest to renovate these properties, but we can kind of help there. So it's almost like a flip, right? You're fixing it up. It's a value add. You're just flipping it to an investor versus a a homeowner. So that's one way we've kind of been pivoting our actual company, just to be mindful of growth in the fix and flips because of the current market.
Awesome. I think one of the things I heard from each of you that I like to keep in mind and I like to reiterate to other investors is there's value in being opportunistic. A lot of people think I'm a house flipper, and I certainly do flip houses, but that doesn't stop me from doing other types of deals. And I think a lot of you on this panel would get labeled as a developer or a lender, buy and hold, or whatever it is, but you don't pigeonhole yourself into that one niche. You find value in any or potentially lots of different opportunities. And you don't say, because I focus on this type of deal, that I only do this type of deal. And I think that's probably contributed, I think you'll probably agree, to a lot of your success over the years, is that you're willing to be creative and opportunistic when deals come along. So the most common question, so I think I said that was one of the most common questions I was getting these days. But by far the most common question I get these days is how to find deals. I think we've all found that over the last 3, 4, 5 years, deals have been much harder to come by. So I'd love to hear how each of you are finding deals these days or marketing for deals. What's your strategy for acquisition these days?
I would agree that, to piggyback, I speak many languages. No, I don't. But I would, also say that the other strategy we've been doing is you still can find deals on the MLS. We bought a property a few weeks ago, and it was still on the MLS. You just have to move very quickly. So, everyone's like, no, you can't find anything on the MLS anymore. I would disagree with that. You just have to move very quickly. And the key there is you have to know your market. You have to know what a good deal is. So if you're going to move quickly, you can't just, I think that's a good deal, or is it too much money? Or you have to know exactly what your prices are quickly, so you can move and make an offer and go for it. Because if you don't and you wait and say, I have to understand the market, and a week later it's just not going to be there if it's a good property. So I'd say that just in terms of a strategy, in order to move quickly, you got to do your research and your homework and know your market like inside and out. I'd say the other strategy, we bought a couple properties last year on the auction sites. So don't think, those sites are, nonsense either. They're, we found 2 really great deals, and we were able to get into both of them legally. We didn't break in. Not suggesting you do that. I think I'm being recorded, so. My family is from New York, though, so no, I'm joking. But no, I think it's really important to be able to use those sites and know, again, your market. You're not going to buy a property that you don't know the area and it's cheap. That's obviously not a good idea. But we knew our market and we knew the street, and we were able to get into it. And it was fun. I actually really enjoyed. I enjoyed doing it, and I was like, totally attached to it at the time, and it was kind of interesting, exciting. But so again, that was the other 2 strategies in addition.
Awesome. I think it's an interesting theme that I heard here. I think if I would have asked this question 10 years ago, at least I'll speak for myself, 10 years ago, if you would have asked where I was getting deals, I would have said I was doing 30 or 40 REO deals a year. And 6 years ago, I would have said I'm doing 30 or 40 short sales a year. And 3 years ago, 30 or 40 deals that I'm getting from my mailing campaigns. But what I'm seeing today and what I'm hearing from our panelists is that there's no one great way to get lots of deals anymore. And if you want to get deals, you have to be willing to try a lot of different things, and it's a lot about relationships. I think, would you each agree that relationships are becoming more and more important as deals are becoming more and more scarce? So that's, I guess, the takeaway that I'm getting from hearing our panelists today, is that you need to be willing to cast a wide net and look for deals in all different places, because you're probably not getting as many deals as you want from any single source anymore. So that's great. So we've talked about deals. Let's talk about the other side. Let's talk about money. Looking and talking to each of you and looking at your backgrounds, I assume each of you have some different avenues for raising money or purchasing your properties. Do any of you want to talk about how you're raising money, if it's maybe a little bit outside traditional means, or any of you setting up private placements or syndications, or doing large partnerships, things like that? Anybody want to talk about how you're raising money these days and give our audience some ideas on how they can raise money?
So when we started, we put some money of our own money together, and we also borrowed money from family. Both of our parents, middle class, just worked really hard their whole lives, owned their home free and clear. So how many people know people that own their home free and clear? At the time, it was opportunity, right? So then we actually borrowed against their homes, and that was some of our initial funds to buy some properties. So as we continued, at that point we had about 20 units in New Jersey. It was about 2,000, no, we had more than that, in 2010, and our business just kind of plateaued. We had a portfolio, but we just weren't growing. And we had some of our own money invested, and we were just stuck. Not stuck, but just plateaued. So, we both talked about, my husband and I, wanting to grow our business. And so, we knew about private money outside of our family, of course, and friends, more outside of our family. And, we just hadn't put a deal together yet like that. So the next week, I was still doing full-time consulting. So my husband at the time, when we started our business, quit his job to focus on real estate full-time. And I kind of, continued doing consulting and working in our business kind of part-time. So at the time, I met with an old friend. I went to grad school here in Philadelphia. Actually got a degree in social work, another story. But and I was meeting with him, and I said, listen, what are you up to? And I was networking with him, and we were just catching up. And he's like, I really want to get into real estate. I just don't have the time. And I knew he was a financial planner. He lived in Manhattan. I'm like, that might be a great partner. I was like, you got to talk to my husband because he's, in the throes of our day-to-day business. So he was actually one of our first private lenders, but he actually came as an equity partner. So there's a lot of ways. That was an interesting property because we had an equity partner in there. And what I mean by that is he was 50% owner of the property, and we were 50% owner of the property. He put the money down to buy the property, and my husband did what? He had the time. He had the expertise. We had a portfolio. We knew how to run rental renovations and what have you. So that was a win-win. Well, what happened, we ended up refinancing, taking that money out, his money, and he said, what do you think he's going to say? He's happy. He's making his cash flow. What's our next property? And then that kind of snowballed really one of our first equity partners, so to speak. And we did a LLC at the time. And then we also used private, and then we started working with private lenders. One of our first private lenders was someone who had to, turn their money over to they had the company IRA, and then they turned it over to self-directed IRAs. And those are great lenders for your business as well. He wanted a return on his money, and he's probably one of the highest percentages we pay because he, at the time, and that's got to shift and move. But anyway, that's how that kind of evolved. And then we were using private lending and equity on various projects. And you can use both of those strategies on buy and hold and on fix and flips. You just have to be careful on both of those. And then when we purchased an apartment building in Pennsylvania was our first syndication. My husband, don't ask me a ton of syndication questions, I know a bit. My husband runs that piece of our business. But it basically was, in bottom line, you own a percentage of the company. It was a limited partnership. We owned a percentage of that company, and our investors, people putting up the money to buy the building, in essence, is going to be able to own the majority of the company. So we own a percentage, a smaller percentage of the company. And that's how we're able to get into bigger deals. It'd be awesome if we owned all of our units 100%, but we don't, and that's okay. We'd rather own more and with people, and so win-win. So we grew that way, and we've been able to raise money from people who trust them. You build those relationships. I do a lot of our communications, and the biggest thing you do when you have a private lender or anyone investing with you is be in communication and over-communicate with them. And I can't stress that enough. We do monthly newsletters. We have investors that don't even open our newsletter. But you know what? We're going to keep sending them because it shows. We take videos at the property. This is what we're up to. This is what we're doing. So they know their money's being taken care of. If you're going to raise money, you better protect those people's money and do whatever you can to do that.
Great, thank you. That's great. So it sounds like from the money side, it's very similar to the finding deals. There's a lot of different avenues, and relationships are tremendously important. Liz, I want to touch on something that you kind of mentioned. You talked about partners, and I know there's lots of different types of partnerships. I personally have a very much, I have a love-hate relationship with partnerships. I've had some very good ones. There's somebody in the audience here that I've been partnering with for 8 years, many millions of dollars. I've had other big partners that have gone south very quickly and horribly. I'd love to hear a little bit about if any of you have any stories to share about how you've used partnerships to advance your business, or on the flip side, if you've had partnerships that haven't gone well, that you've taken lessons away, that perhaps people in the audience can learn about how they can more effectively use partnerships.
Yeah, so, with the about 7 active projects and fix and flips right now, I'd say we have 1, 2, 3 different partners. So we partner with a lot of different people and in different capacities. When we started, it was just us. And I think one of the most important things you have to do, whether you're starting, whether you're evolving, is to do some self-examination. To really look at yourself in the mirror and say, what am I good at? Especially when it comes to fixing and flipping. What am I good at and what am I not good at, and how do you build a partnership around that? So at the time, it was about same time frame, around 2010, my husband partnered up with a gentleman and, fix and flipped a property, and it worked out really well. We made some money with him. And we moved very quickly to, let's form a company. Let's do 20 of these, And so something that we've done, and it's not always worked out the best way, is that we move kind of quickly. If something works, we scale it. We want to just do a lot of that. And you have to move slowly with partners, just like a marriage, right? You wouldn't meet someone and say, let's get married today. I just met you. Well, you could, but the person would probably look at you a little weird. So the same thing with partnerships is you got to move a little slower. It's like dating. And had we taken it slower with him, we may not have had to then end that partnership, which we had to. And it was unfortunate. There's a lot of reasons for that ending of that partnership. And I don't want to, go into too much detail. But in essence, it was, people not aligned, really aligned. So if you're going to partner with someone, you have the time, they have the money, great. That's one alignment. But personality-wise, if you're someone who's very analytical and you partner with someone who also is very analytical, who's going to then go out there and meet people and network? Well, someone's got to do that. So really aligning and getting some diverse styles is really important. So that partnership ended, unfortunately. We had a bunch of properties that were in the middle that weren't completed, and he was our construction guy, so that was tough. But we made that through. We did what we had to do, and you make it work. Now, in terms of where we're at, and we have a great partner here in the room as well. We do a lot here in Philadelphia, and we kind of do the same thing, where it's a joint venture, you have a agreement in place. You want to have your attorney review it, and who's doing what, and this is how this is going to work, and you have it in writing. And we had the other partnership in writing. It just didn't work out. But I can't stress that enough, that you have to be aligned with who you're partnered with and what their values are. Do they want to make money today, or do they want to invest in the future? That's also important, is how you're making money. Because people are motivated by what? Making money. But if you have to make money or you want to make money are two different things. And that also became a rub with our partner, where we were pulling money out of the flip business where we should have been reinvesting some of it, and because of different needs in that partnership. So
you made a lot of great points there, and I just want to highlight one because I think it's so important. So many of us, when we look for a partner, we look at a partner, we often naturally look towards people who are like us, because we want to work with people who are like us. And oftentimes the best partners are those that fill our holes, that fill the things that we don't have, that can add to us as opposed to just multiplying what we already have. So I think that's a great point. When you're looking for partners, find somebody that has aspects of their personality or business or experience that complements your weaknesses, and vice versa, as opposed to somebody that's just like you. What is the best ever advice that you might have? So I'd love to get just a quick 30 to 60 second answer from each of you. If you had to give one piece of advice or words of wisdom to our audience, just based on what you've learned over your years of investing, what would that best piece of advice be?
I think something that limited our growth early on was getting distracted very easily in this business. And I think there are so many niches, and there's so many ways to do, whether it's multifamily and, mobile home parks, especially if you're on bigger pockets, there's so many ways. I think if we had stuck with multifamily investing earlier on, and we did it, and really were focused, it would have helped propel our growth even more. And so I say, be open to different things. That's something that came up here on this panel, but get good at something. And do it again and again and again, and don't pivot and don't move off of it until you've gotten good at something. It's when you try too many things too quickly is when you may not get success, because it should be boring. It shouldn't be as exciting as the TV shows. It should be boring in some ways, not boring, but it should be repeatable and process-oriented. You should become good at it, and then you can go, oh, this is interesting, or this is interesting. But don't move off of it until you've gotten good at something and you had success with something.